Hello and welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Rima. With me is Hormis. And it's a good Friday. It didn't look like that when we started trade. It was a flat, we began the day on a flat note, but now you can see the momentum building up in the markets. The Nifty is now up more than 100 points. It's inching towards that 25,300 mark. Sensex up 300 points. At the index level, Sensex is rising towards 82,500. And now the week-to-date tally stands at 1.5% for the Nifty, 2% for the mid-cap index, and today trade or momentum is being powered by the banking stocks. So the Nifty banking index is up 0.75 of a percentage point, with the PSU banking index up 2%.
Indeed, and it's been a good week for the markets.
Yeah,
it's the fifth week that the index has gained out of the last 6. So it's positive momentum all around. And 25,300 on the index for the first time after the 22nd of September. The good bit, both the Nifty and the Nifty Bank have both now crossed their respective highs that they made on Tuesday. Nifty crossing that 25,220 mark and the Nifty Bank also crossing that 56,500 mark. So both of the indices powering each other along as well. So good going as of now. The bulls would hope that the week ends on a high.
Okay, indeed. And today, though, tech stocks are a bit of a, back foot. The good part is the Nifty tech index, the IT index, which was in the red now, has flattened out completely. So from the day's low, we have seen some buying emerge in the Nifty IT stocks. So let's get that up for you on your screen. TCS continues to trade with cuts of close to about, I think 0.5% thereabout. TCS now down 1%, while Tata Elxsi is down close to about 2.5%. But you are seeing strength in other names like Wipro, Firstsource, Zensar, LTTS. These stocks are still holding up in the grey. But Hormis, what else? What are you putting the spotlight on?
The broader markets are seeing enough stock-specific activity as they have all through the week as well. There are some earnings reactions as well. I'll start off with one such as 5paisa Capital. The results came out after market hours yesterday. The stock has cooled off significantly from the highs of the day. At one point was up around 14 to 15%. The volumes are already at record high levels. We have had close to 30 lakh shares that have traded. The 20-day average is only 4.5 to 5,000 shares. And the stock had broken above the 100 DMA and the 200 DMA of 384 and 386 respectively, but has not managed to sustain at either level. So a significant cool off from the day's high for 5paisa Capital. At the intraday high, it was the biggest single day gain since March. The one that is holding on to gains though is Yes Bank, and the 6.5, almost 7 to 8% move that we saw intraday. The stock is up in 8 out of the last 9 trading sessions. It's set for the best weekly performance since May of this year. The stock already has seen close to 20 crore shares that have changed hands. The 20-day average is just around 3 crore. And the other good bit is the fact that it is trading above the SMBC deal price of 21.5 rupees a share. It's now made an intraday high of 24.25. The stock now on a year-to-date basis is up 22%. That was an underperformer in the previous year. Tata Communications is the other one today, is doing well, almost 9.5% higher now on the stock, building on to those gains. The volumes are the highest in 2 months and counting now. We had more than 10 lakh shares. We must have now been close to 15 lakh shares that have traded hands. The 20-day average is only 65,000 shares. So another stock that is doing well on very strong volumes. And during this 6-day up move that the stock has seen, the stock has broken above its 100-day moving average, and it has now started to surge higher after that. And courtesy of this move, the stock has turned positive on a year-to-date basis and was an underperformer last year as well. The last stock on the list is Jyoti CNC, and it is the top gainer on the Nifty 500 now. It must have surpassed, Tata Communications must have surpassed it by now. 9% higher on this stock as well. The volumes are the highest in 4 months, had over 15 lakh shares that have changed hands already. The 20-day average here is only 55,000 shares, and the stock has comfortably broken above its 50-day moving average, which was at 930. The next level on the upside is the 100 DMA, which comes at around 1,027. And as a result of this move, the stock has now tripled from its IPO price of 331 rupees, Rima.
What a big mover, inching towards 1,000 now. Thank you very much for that. Let's get to a big story then. And what else? It's TCS as it kickstarts the IT earnings season. Now, just a quick word. Q2 was a beat on muted expectations, both on the revenue and on the margins. And the company reiterated that revenue growth this year, FY26, if you strip out the BSNL impact, will still be better than last year. So that's a positive. And this is despite the macro environment not seeing any change or improvement. The good part is there's no deterioration, but there is no improvement in IT spending or, the broad demand environment as they looked at Q2. But what brokerages are highlighting is that the company is showing some signs of aggression with proactive decision making. One, around the restructuring of its workforce. Remember, they had to let go, or they planned to let go of about 12,000 employees to make the company more agile, AI ready. They're also being more acquisitive. They've announced one acquisition, a tuck-in capability acquisition, but they plan to do more. And they also are participating in the AI ecosystem with adjacencies, with a planned 1 gigawatt data center. Now, regarding this data center, what the company told us is that the plan is 1 gigawatt. Right? But eventually, and the way the math works is that for 150 megawatts, you need a $1 billion capex. So they will start with a $1 billion capex, build 150 megawatt in the next 18 to 24 months. But over the next 5 to 7 years, they hope to build the entire 1 gigawatt capacity. It will be, and they're looking to get in a partner, a maybe 50-50 kind of financial partner. And this investment, although the company is cash rich, they will do it with the help of a partner, get in equity and debt. Now, the fear in the market's mind is they like the aggression that the company is perhaps diversifying. With this, they also increase their, they become a little stickier with hyperscalers, who are potential clients for a company like TCS. But the return ratios for a data center business are lower than IT services. IT services enjoy very high return ratio because there is no capital. The only capital is your employee cost, while a data center business is capital intensive and therefore return ratios are lower. So that is a bit of a fear in the market's mind. But when we asked the company, he said, margins will not be very dilutive. So maybe a little dilutive, but on a scale of TCS, I don't think it matters too much. The second thing is very, very clear that we're going to be very acquisitive. They've got a new person on board, a chief strategy officer who's going to be looking at M&A. And the mandate given to him is that, they're already in conversation with multiple companies. One acquisition has been announced. The other bit that we want to highlight is the reduction in the workforce, because that's quite sizable. Quarter on quarter, the headcount has come down by nearly 20,000 employees. Okay, of that, only 6,000 is linked to the realignment, letting go of the people. 6,000. So the balance, 14,000 is also to some extent voluntary attrition, that after the company let go, maybe some people said it's time to shift. Or the company is stealthily letting go of some more people, and it's not a part of the planned workforce reduction, but that is also fairly sizable. And one final word, you should keep your eye on Tata Communications, because what the street is doing is latching on to Tata Communication as a potential play on TCS's data center business, because Tatacom has land, and two, Tata Communication also provides communication services to other data centers. So then they would participate in TCS's data centers, and that's the story. The street seems to be latching on to 10% up now.
Yeah, that explains the move, right, on Tata Communications. So doing well, but TCS though at the lowest point of the day. But mind you, the stock has done well this week. Has TCS has gained in 3 out of the 4 days prior to today's session. Is continuing to rebound from that 52-week low that it fell on the 1st of October. But Rima, thank you for summarizing the entire quarter gone by for TCS and the road ahead for the company. In fact, listen in to the management, as Rima did speak to them earlier as well. Let's listen into what they had to say.
We have to take this ambitious journey and be the largest AI-led services company. Currently, we are looking at about $1 billion, but just to clarify, we will be looking, this will come as equity and debt.
This $1 billion?
$1 billion. My rule of thumb, like what I had is roughly 150 megawatts is $1 billion.
Okay.
Okay, so we are talking about 5 to 7 billion, but I'm not going to be investing all 5-7 billion year one. So it is going to be a 5 to 7 year exercise. We'll do first, what we intend to do now is establish a capacity of 150 megawatt to start with, which would start in about 18 months time, by which we should be operational. When I said we want to expand our participation in ecosystem, One leg is expanding into the adjacencies. I don't know whether you looked at, we also announced the acquisition. We want to also have cash to acquire. We want to be more acquisitive to expand our participation. So we need to conserve cash to do more investment. We've been talking to a couple of people. We are very close to closing the discussion.
It'll be financial investor?
Financial, it's a financial investor.
We talked about pivoting to our new vision, and towards that there would be investments needed, and at the same time we'll be focusing on doing a disciplined execution and leveraging on our operating parameters. We want to inch towards 26.
This rebalancing of the workforce, and we spoke about that briefly with Kriti as well. It'll continue, but it's not driven by cost, etc. But it will continue through the course of this financial year. Can you put some numbers to it? Do you have?
Oh, yes, definitely.
Yeah.
So Prashant, first and foremost, it is not on cost. It is not because of AI. That's something that you want to really get the facts right.
TCS, the big story of the day, the big earnings reaction of the day as well. Take a short break. On the other side, put the spotlight on the crypto markets. Manisha Gupta joins in.
Powered by Coin DCX.
Welcome, and you're watching Crypto Space right now. And take a look at the Bitcoin itself, because we're looking at all-time highs onto this one in this week. It continues to be a strong year, 2025, for crypto. All quarters that you see, the month of September, which usually is seen as September curse, also was in the positive. And October, which is October, has started on a positive note. So we are looking at $126,000 in case of Bitcoin there. The interesting point is that since the time we've seen 100,000 break on the higher side, it has held on to those levels, and it only has been making higher highs there. The market cap also seems to be steady, holding above $4.2 trillion as we speak there. The support really comes in from the fact that you're looking at global economic uncertainty, and is the reason that we have seen alternate assets do quite well. The ongoing US government shutdown also has led to concerns into the market. The reason that you have seen gold, silver, platinum and Bitcoin do very well because of that as well. And then the street also is working with further US interest rate cuts. Almost 100% probability of another one coming in the month of October and then in December also has been keeping these markets positive there. The street also is looking at very strong inflows into the US listed spot Bitcoin ETFs. We've seen a record number of nearly $3.2 billion in the previous week. That continues to keep this momentum on the higher side. And then it's not just about the retail. The on-chain data and derivatives point to a restrained selling. So there's not too many people selling. They are still buying. And when you look at those numbers, that will tell you, because the derivatives traders are clustered around that $120,000 mark. The maximum of call options are around 120 to 140,000. So that tells you that most people are willing to buy between these levels. And we are trading at around 121, 122 at this point in time. So strong buying is what you're looking at within options between that number as well. Institutional adoption, countries buying. You also have high net worth individuals buying into crypto, including it in their portfolios, is what really has been supportive. This is another factor that the markets are looking at. With the dollar index down by nearly 9% in this year, and the US national debt higher at 36 and 37 trillion of a record number, there is alternate currencies that the markets are looking at, and Bitcoin perhaps fits into that bill well as well. If you look at the time until April 2025 and the kind of government holdings around the world that we have seen, 2.3% of Bitcoin currently is held by governments, and this majorly comes in from countries like United States, China even as it has banned mining or trading of crypto, but the government is the second largest one when it comes to crypto holding, and this is after US. And then you have United Kingdom, Bhutan, El Salvador, Ukraine, Germany kind of countries as well, where the government holdings within Bitcoin are stronger. Why do they hold Bitcoin? Well, one is because they have seized assets, active purchases by some governments as well, and some countries are doing mining. And then you have countries like Ukraine, etc., which got donations in sense of Bitcoin to enable a lot of, or facilitate a lot of humanitarian aids there. Also, there are a lot of governments which seem to be selling Bitcoin as well. This usually is done in case of budget constraints, market timing, because you need that kind of money there, and then some legal obligations as well, because it doesn't fit into their constitution, is the reason that we see sales coming in. But with the way the regulatory seems to be moving, there are more countries which seem to be working with cryptos at this point in time. Well, with that, it's a break on this part of Crypto Corner. But on the other side, we'll talk more market specifics and stocks.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back onto a corporate conversation. Then Interarc Building Solutions recently announced capex for its new facility in Gujarat. We are now being joined by Manish Garg, who is the CEO of the company, and we'll be basing our conversation on three key points. The first one being their capex targets, the capacity expansion, their plans for growth in FY28, and the scope, whether there is scope to increase the growth guidance of 17.5%. Mr. Garg, good morning. Thank you so much for joining in. We'll start off with the capex plans, right? You've announced a new capex for your facility in Kheda in Gujarat. When does that capacity come on stream? And once it does, how do you expect a boost to your balance sheet because of that?
Yeah, good morning and thank you for having me on the show. We broke ground yesterday on our Kheda unit in Gujarat. It takes us about 9 months to get it to the trial production. So somewhere in the month of June, we will start trial production, June 26. So I would say that approximately, and we will have the full production coming in by end of December. So therefore, part of it will contribute to our FY 26-27 revenues, but very clearly the next year, which is FY 28, it will kick in fully. We would be adding about 40,000 metric ton in totality. So part of it will come in next year, and whole of it will be next to next year in the capacity.
Okay, and your current capacity would be about 1.6 lakh?
So our current capacity now, after the commissioning of our what we call the fully integrated unit of Andhra Pradesh and the expansion in Kicha, stands at 200,000 metric tons.
Okay. So the incremental capacity addition is about 25%, is what we're trying to understand. Is that correct? From 160,000, you go to 200,000 approximately.
So we have already gone to 200 with the addition of Andhra and Kicha, which are now fully operational. With addition of Kheda in Gujarat, we go up by another 40,000 in next 1 year. We in fact broke ground for another one, so these two are parallel. In Andhra on a new land of 20 acres where we broke ground on 27th of September, that will add another 25,000 tons to our capacity. So I would say in next 12 months, we have these two major capex. There we are spending about 80 to 100 crores, including the land. And here we are spending 70 crores excluding land.
So the visibility is for 265,000 units in terms of capacity?
That is correct.
And what does that visibility lead you to on the top line front, Mr. Garg? Because since you are on a strong capacity expansion spree, it is fair to assume that the demand right now on the ground remains fairly robust.
Yeah, so the demand is very robust, and our order book stands pretty strong, as quarter on quarter it used to be. And there are new avenues also in the new age sectors like data centers and semicon and EV batteries. So we see very, very strong traction in the demand, and that's why the capacity expansion.
Okay. What is your guidance for top line in FY26, FY27? And once this incremental capacity comes on stream, what is the overall revenue that you're looking at?
Yeah. So as of now, for the FY26, and with half year, already gone, and first quarter, you saw how we grew over the last year. Our guidance would still remain 17.5% for FY26. We will of course try and do better, but our guidance would remain what it is. And for FY28, we had already told that we would be doubling our turnover at the time of going for IPO, so that remains at 2,400.
What about margins, Mr. Garg?
Margins will, we are trying to improve, and with this traction, margins should be in the similar range, but yes, they can always be better.
With the kind of capex that you are doing, do you see any impact on the margins, at least in the immediate term, and then they improve in the future?
I would say capex wouldn't really affect our margin because capex doesn't go into the operational cost at all. So with this capex, but I don't think with this capex spending there is any impact on the margin. But going forward, when the capacity expansion happens and the new age sectors have stopped adopting, quite obviously there is always a possibility of moving up the margins a little bit.
You said the the order inflow has been very strong.
Yes.
What is it in Q2? Are you in discussions with with more clients for further orders? I mean, what's the pipeline looking like, and what would you target in terms of exports?
Yeah. So our exports, we are, I would say, we are right now building the market for exports. So the numbers are not really very great in terms of the actual sales, but we are building market for exports. As it is, a lot of our business is domestic, but yes, we are building exports. The numbers will start to come in a bit later. In terms of domestic, it's very strong. In fact, at the end of last quarter, we had announced the order book of approximately about 1,700 crores. And it remains pretty strong even now. And we are in discussions with a lot of large orders in various sectors, including manufacturing, institutional, as well as infrastructure.
Pleasure having you as always, Mr. Garg. Thank you so much for sparing time and joining us. Wish you good luck for the rest of the year as well. Let's take a short break. Get back to markets on the other side with Ajit Mishra of Renegade Broking.
Welcome back. Let's take a look what does the data on F&O front indicate. So as expected, we are seeing a short covering with Nifty hitting the high above the level of 25,300, and similar move is seen in Nifty Bank as well. All the PSU banks are higher after the reports that in the PSU banks, a managing director can be hired from private sector. On the option data, if you take a look on the put side, 25,200, there is a sharp fall in the premium. Similar thing can be seen for 25,250, but at the same time, there is huge increase in the open interest. So it tells you that around 25,200, it has become the major support level for Nifty. On the call side, 25,300 premium has increased to 99 from 47. 25,500 premium has risen to 21 from 10. It has almost doubled. So support, I have taken 25,150. Resistance, first resistance would be 25,350. If we manage to cross that, next comes around 25,450. As far as Nifty Bank is concerned, support 56,000 and resistance would be 57,170. That's the recent high. Now coming to the stocks, Yes Bank seeing huge buying and fresh longs are seen in the stock, currently up more than 6%. Sona BLW, it's higher for the second straight day. Today also it's up almost 3% after a big move that we have seen yesterday. BSE continues to see fresh longs. Today also the stock is up more than 2%. And lastly, all the gold financial names are down because gold prices have come down overnight. And you can say Manappuram Finance is seeing fresh shots.
Manappuram and Muthoot, yes, because of the fall in gold prices. Sudarshan, thank you for that. Ajit Mishra from Renegade Broking joins in for a quick chart check. Ajit, good morning. Thank you for joining in. Very quickly, if you could tell us the levels that you are watching out for on the Nifty and the stock recommendations as well that you have for the morning.
Yeah, good morning, Ormaz. So yes, it's been almost 2 months that we are seeing markets managing to hold the previous lows. So means we are maintaining the higher lows, higher highs setup. And this time around, what Sudarshan was sharing, the moment we cross 25,450, that this momentum can see further reflect towards 25,600, 650 in the near future. So we are bullish on market, and we recommend maintaining buy on this approach till 25,000 is intact. Basis that, the first recommendation that we have from the defense basket, like the top two names, BEL, HAL, they are leading from the front, and we are eyeing a fresh breakout in BEL after almost a month-long consolidation. So 432 is what we are eyeing in the near future as a target. So with stop at 407, one can go long in BEL at current levels. And from the PSU banking basket, PNB is something that one can look for fresh long positions as well, with 122 as an immediate target with stop at 113.
Thank you very much for that. Get into a break. On the other side, we'll talk markets. Mukul Kochar from Investec Capital Services joins in next. Markets and invite Mukul Kochar from Investec Capital Services here with us on the show now. Mukul, morning. This is Reema here. So let's start with your overall read on the markets in terms of macros, the global positioning in India, and even the market outlook.
Sure. Thanks, Reema, for the invite. So, Reema, what seems to be very critical for India at this point is aligning consumption. There is a lot of money in the economy that can be invested. The private sector is flush with capital. It's completely delevered. It's demand that needs to be stimulated. Now, that was on cards, as we were set to sign a treaty with the US, which is a 6 times consumption market than the US. There was also a desire to restructure supply chains to diversify away from China. So all that was actually set to play out, and we were expecting a substantial amount of private investment to come into the economy to give a boost. We believe that has been delayed, and it's a complicated issue, and it's going to take time to play out. But eventually, the long-term, the long-term logic of this trade treaty still remains. US needs to align with, or US needs India to align with itself in the long term. If we tilt towards China, that is not beneficial for US in the long term. Near term, we don't seem to have cards, but long-term cards are very strong. So we expect the trade treaty to go through, and that will be a trigger for private investment and for the market to move. In the meantime, the trade pressure is real. It is exerting pressure on the INR, and that is why the range-bound markets in the near term. Last point, EU is an equally large trading partner, and we seem to be making progress over there. Opening up of that a large economy for Indian goods is also going to be a positive, but EU just moves slowly. Yeah. So if we do sign the trade treaty with the EU this year, it has to still be ratified by all the different, countries, 27 different countries, which takes time. So EU, even if we get it done, it's a year and a half before we can expect some economic impact. So we're closely watching the US-India trade deal for the next move for markets.
Indeed. But Mukul, TCS came out with numbers yesterday. What do you make of that? Not specifically towards TCS, but do you believe that the rest of the IT pack will follow suit in terms of the kind of announcements that it has made, be it the data center foray or stating the fact that they are going to be more aggressive in terms of making acquisitions? Is this IT's time to rebound, considering, or if you could say, the proverbial backs against the wall kind of a scenario?
Yeah, absolutely. So IT, we should recognize that IT sector in India is a trading sector, especially the large caps. Yeah, this is no longer a secular growth sector. It's fairly large. We have substantially large market share of the offshore market. So we do we are exposed to global investment cycles. Yeah, IT investment cycle. In that manner, the sector has underperformed for some time, both in terms of earnings growth, sales growth, and stock performance. We believe the stocks sector is set for a rebound, but once again, we emphasize it's a trade. The catalyst for the rebound will, of course, be good demand commentary from the companies, and not to forget that the INR has depreciated, which is both a benefit for INR top line as well as margin. So yes, we've been asking investors to be constructive here, look for a trade in that sector.
What were your thoughts when TCS announced that investment, 1 gigawatt data center capacity?
It's interesting, yeah. So I used to cover the sector 20 years ago in the US, and companies were exceptionally tight-fisted with capital allocation, and that is what used to account for exceptionally high multiples at that time. But remember, this was a 25-30% growth sector as well. So I think that capital allocation discipline, it will still be disciplined, but you will see some sort of a loosening of the strings there. Indian IT companies were always averse to M&A because IT services integration is notoriously tough. But as growth comes down, size picks up, they have excess capital, you will see return dilutive investments take place, not NPV dilutive, but return dilutive. So I'm not surprised. It's a function of the time.
And should that be read positively?
You can take it as it is. ROIC will come down for the sector. It will derate a bit, but as I said, it will be NPV positive. It also needs to be done. Yeah. So we need to create data centers for servicing Indian data. So yes, it's an NPV positive sector. So I would probably think it's a positive overall.
What do you make of the slew of banking updates that came out earlier this month, Mukul? At least from most of the lenders that came out, we saw double-digit growth in the advances and the deposit front as well. What are you watching out for when it comes to banks this time around, considering the fact that the loan growth and the deposit growth parameters have been taken care of this time?
Yeah, so, banking sector, we've been actually constructive on and tied to the US move. Some of the pressure in the banking sector was coming from expected NIM pressure as the street was expecting RBI to cut rates. Till we have a belief that till we sort out our trade deal with the US, RBI will be reluctant to cut because that exposes the rupee. We've been hearing recently that RBI has also been intervening in the money market. So if you're intervening in the money market to protect the rupee, then rate cuts are probably off the cards, is what I feel. In which case, you will see margin upgrades in these sectors, and part of that is already playing out, and that's why the sector becomes attractive, especially the PSU bank, play where there was as a percentage the EPS impact from rate cuts was supposed to be the highest. There's also the fact that there's a pickup in lending post some government stimulus. There's also the fact that asset quality seems to be getting better.
Thanks, Mukul, for joining in. Short conversation today, but a great one nonetheless. Thank you for joining in. Get into a break. We'll come back with more on the markets.
Welcome back. Still 100 points higher on the Nifty. The Nifty Bank continuing to do well, as are the broader markets. Business updates and results continue to trickle in. We take your leave on this edition of Trading Hour. From Reema and me, thank you for watching. Halftime report on the other side.